Banking sector is the backbone for any economy to grow in today's world. So today let's learn about one of the most important banking sector reforms in India proposed by the Narasimham Committee. Before we go any further, if you had not subscribed my channel, please subscribe my channel and hit the bell icon for getting the notification of my upcoming videos too. Also, like the video if you feel that the content was good and also keep commenting in the comment section about the videos. So without any further wastage of time, let's move on to our topic. First of all, let's see what exactly is this Narasimham Committee. Narasimham Committee was headed by Mr. M. Narasimham, the 13th Governor of the Reserve Bank of India. It was formed twice, once in 1990 and the other in 1998. From 1980 onwards, India faced a lot of economic as well as banking crisis. Hence, this committee was formed to draw India out of economic as well as banking crisis in making it one of the largest economies of the world. During this period of late 1980s, recognizing the evolving needs of the banking sector, the Finance Ministry of the Government of India set up various expert committees with the task of analyzing India's banking sector and to make recommendations relating to the legislation and regulation to make it more effective, competitive, and efficient in nature. For that, two such expert committees were set up under the chairmanship of Mr. M. Narasimham in 1990 and 1998. Now, let's see one by one what are the major recommendations of the 1990 Narasimham Committee. First one was to reduce the cash reserve ratio and statutory liquidity ratio. The cash reserve ratio was to be maintained at 3 to 5 percentage and the statutory liquidity ratio was to be maintained at 25 percentage in a phased manner. This will help the commercial banks in creating more credit in the economy. Second one was to reduce the priority sector lending. The directed loans must be reduced to 10% from 40% of the total liabilities of the bank. This will reduce the burden of the commercial banks in providing high risky loans to priority sector to providing loans to the low risky and more return friendly corporate sectors. Third one was to deregulate the interest rates of high loan amounts according to a base rate and upper rate as per the market rates. Formation of asset reconstruction companies. An asset reconstruction company is a special type of financial institution that buys the debtors of a bank at a mutually agreed value and attempts to recover the debts or associated securities by itself. This will help the bank in reducing the burden of recovery of loans and other securities. Another important recommendation was the formation of debt recovery tribunals for speedy decisions over the debt recovery issues. Next important recommendation was giving more autonomy to the banks for smooth functioning of the banking sector in the country. Next important recommendation is the acceptance of the Basel norms 1, which was proposed in 1988. Another important recommendation was to maintain the capital adequacy ratio at 9%. The capital adequacy ratio is the ratio of bank's total capital to its risk-weighted assets. The ninth important recommendation by the Narasimham Committee was the abolition of licensing. Abolition of licensing to open new branches as well as new banks. If not fully abolition, then at least reducing the amount of licensing norms. And the last important recommendation made by the committee was the dual control or the regulation by both Reserve Bank of India as well as the Ministry of Finance of the Union of India to be reduced to the Reserve Bank of India's regulation. Now, let's study about the second Narasimham Committee. Yet, in 1998, another committee under the chairmanship of Mr. M. Narasimham was appointed. The committee was set up to strengthen the financial institutions of the country. The committee was tasked with the progress review of the banking sector reforms since 1992. Now, let's look into the major recommendations of the second Narasimham Committee. Loans to be provided to less risky assets, or the narrow concept of banking was to be done, which means loans must be given to the less risky parties only. Implementing universal banking, that is, all other functions of the banks like investing, advisory, mutual funds, insurance, etc., should be implemented in the country. Making it mandatory to implement Basel norms and capital adequacy ratio in the banking sector. Another important recommendation was to merge all the public sector banks to increase competition and to reduce the cost, and also in promoting the private banks in the country. Another important recommendation was to implement the core banking solutions and to amend the necessary acts according to the situation. Another important recommendation of the committee is the faster computerization and technological upgradation in order to move along with the globalization. Next comes the training of staffs in order to cope up with the changing situations and cope up with the current situation also. Another important recommendation is the depoliticization of the banks, that is, to reduce the political interference in the banking sector in India. And the last recommendation by this committee was professionalism in banking, especially in the public sector banks. That is, ethics of a profession and code of conduct should be implemented strictly in the public sector banking. Today, we had learned about the Narasimham Committee of 1990 as well as 1998 and their major recommendations for the banking sector reform. I hope you all liked the video. Please do subscribe my channel and keep supporting me by liking the video. And for any further clarification, please do comment in the comment section. Till we meet with a new topic, auf Wiedersehen.